welcome. Thank you very much for coming, all four of you. And I'm not an expert on exporting, but I am an expert on what we've done to export. So I'm going to explain some of those things today that we've done, and 4 different models that are hopefully helpful for you. And we'll keep that as sort of short as possible, and then we'll have a conversation about what would be helpful for you. Because we produce products. This isn't a sales pitch in any way, but just to put it into context of what we produce. We produce journals, and they are books. As you see already, they have language on them. So when you're talking about exporting, there's already an issue about languages. And our books are about capturing stories, moments, experiences from your family and friends. So they might be a pregnancy journal, they might be a gift you give to your mum, it might be a book you would complete with your child. So from day one, we had a very clear brand, and we also had a very clear idea that these could be products you could take to different markets. And we built the brand from sort of day one, knowing that this might be transferable, but we didn't understand the other markets. We sort of thought we could. So that was the context of what we've done. And our markets, we've got 4 different models that we use, some of which I'm sure you've come across before, but we sell our own products direct to independent distribution partners. So we sell to them, they will do the expertise within their local marketplace. We sell our product designs, concept and brand under license, so some people take the concept, go away and reproduce it in their local market. We manage our own markets, so the United States, for example, we have our own sales, marketing, distribution team, and we manage all that ourselves. And finally, the whole international website bit, which felt to start with the easier route, and with hindsight, probably wasn't the easiest route. But so those are the 4 that I'll try and give you the background for. But the first 2 in particular, they knew the market, and that was the issue for us about local adaptation, looking at our product in terms of the language, but they knew the marketplace, the competition, the pricing. And both the top one, where literally we will sell our products to Australia, Canada, South Africa, they take our UK stock and they sell it on. Whereas number 2, under license, they've taken our concept, they've translated it and produced with our guidance versions in Spanish, in Catalan, for example, that they will sell to their local market. So the top one taking my stock, the second one producing their own stock, the third one, again, my stock, but we had to learn about that local cultural differences. So America is one example here. Already you saw the books to start with. We have Dear Mum. They call it Dear Mom. They spell favourite differently. There was that side that we had to produce extra stock. So first one, taking my stock straight off. Second one, extra stock for them and the expense for them. The third one, extra stock for me. So I've suddenly got extra cash tied up in that route. The final one, we manage from the UK and from the US, where our bases are, and we ship around the world. So different challenges on each one, but also risk and return. The first one, the biggest risk for us was that they didn't pay their bill. The rest of it, they are managing all the work for us. They're selling, they are debt collecting locally, they're warehousing. All I had to do was ship my stock to them. Now the payment terms as part of that distribution agreement delays my cash flow. It's taking my stock, but of course I'm then able to produce more stock in the first place and getting better prices because a large volume is going to Australia or Canada. But so profit margin wise, I'll come to that in a minute, but much more reduced in that market. But I was doing very little work for it once you've built that relationship. The second one, again, a lot of time and investment spent to get the product looking right, to making sure they understood it and that they could translate it with the local issues and needs. But once they'd got the product, quite a simple model for us, that they're paying us every time they produce a book. So it's their cash flow to produce. The license says that they will pay us for each book they produce. And again, it's their responsibility to sell and to distribute and debt collect and so on locally. So that's quite a nice model if you can find the right people to take your concept. Now they have adapted it, not just translated it, but they've made it local and they've really made it live and breathe, which in a sense has grown our UK market because suddenly other countries in the world are talking about us, and that's helped grow the market as well. But that one, a lot of investment up front working with them. Now we're getting paid for not so much work. We are doing some marketing support, which I'll come on to. That one, again, close partners, but our stock is tied up. This one has been a big challenge for us in terms of understanding a market. Would I do that again? Profit margin's much more significant for us, but there's been a huge amount of time getting to know, and this was America to start with, a very similar culture, but also very, very different. A huge market, it's many markets in one. So for us to learn about that has been enormous. These two, they know the local culture and the local issues and so on. But yes, the issues and which is the best model to go for, if you like. They did understand the local market, the pricing, the contacts, and so on. But as I said, the amount of risk and return for each of those, if you're considering which model you want, the working with a partner in Australia, limited risk as long as they're paying the bill, but return-wise, not so much. They're paying you a very small element in terms of gross profit margins. They're making the money out there, and that, if I'm honest, when we first started, shocked me in terms of how little money I made out of that model. Having said that, it's big volume, as I said, so we're getting reduced cost when we're producing our product, but it's an ongoing relationship. Now, all of those models we've talked about are long-term, and that, I think, is one of the biggest learnings we've had about building close relationships with them, that you work with them, they know their market, but how can you support them? How can you make sure that you are supporting them with your marketing expertise? Because we're the product expertise, they're the local market expertise. And that long-term relationship, we tend to, as we bring new products out, solely pass it to them. That was part of the agreement. So we didn't look to have an arrangement with lots of different people depending on who they're selling to. And our products go to gift shops, bookshops, specialist retailers, online, multinationals, and we've found partners that can sell to all of those as well. So it's a long-term relationship. They take all of our products and we work to support them. But risk and return, I say the under license deal now, it's not paying us a huge amount of money per book, but we're not doing anything for it. The countries and the American market, a lot more time and effort, and certainly the US model, a lot of effort, but our returns are much, much, much higher. The gross profit margin, cash flow, and the longer delays on who's paying for distribution, the currency issues, all of those models, it was about risk and return. And we looked at developing models that ultimately, who was taking the most risk? If we're paying in sterling, which most of the deals we do, our distribution partners are paying us in sterling, well, they were taking the currency risk. So let's put that into the model and weigh that element up. We give them quite long payment terms. And again, it's just cash flow. You've got to think about that. Your stock is tied up in Canada or in Australia, so you're thinking about that aspect as well. But the gross profit margin would be much higher in the US, albeit there was a large investment for us putting a team out there and warehousing. So there are some advantages and disadvantages in the four models we use. And trying to find which one's right for you. The markets you want to go to, which ones are interesting for you, and that's about doing your own research. And certainly when we first launched, I had a personal sort of interest to go to Australia. It was purely on the back of that, sounded interesting, but try to find the right ones. Which markets are culturally similar to you? And I said, apart from just fancying a trip, which model? We prepared different financial models on a spreadsheet, literally to look at each possible route, and that's really important based on where you want to go with yours. And that's bringing in aspects like your cash flow, your stock management, what long-term returns do you want? So we prepared models to have conversations with all of our business partners, and the realism of the lower profit versus workload, where your stock's sort of held up. Do you have to tie up more cash in foreign language versions like our US versions was all considerations. So building those models and the realism about that, don't expect it's just going to be easy and that money's sort of flowing in, but it is about a long-term relationship. We then approached potential partners. There were people we spotted who we wanted to work with in different countries. We've been doing quite a lot of PR saying this is what we're interested in, so people approached us. There are shows like this that we've had people approach us. We've done a number of international shows as well. But certainly the book industry, which we sort of on the cusp of, They employ people solely to do this job of license deals, and they will go and target people that you've seen that you think they're quite similar, they're selling into the right areas. So that's a big part of approaching the right people. But this one, our biggest learning was about building those relationships. This was about long-term relationships for us. We wanted to support them with their marketing. We wanted to support them with new products. We wanted to make sure that they're paying us and that it's a mutual relationship. And that contract size, they don't have to be complex contracts, I don't believe, but it was about the relationship and the trust and the ongoing relationship that's really worked. And I know these guys are around here, but you may or may not know, I'm probably not the first to mention this, but the UK Trade and Investment team were hugely helpful when we started exporting. And for the price, or less than a price of a flight, they gave me a whole market data and contacts and research. So it cost us, they may have changed the price now, it's about 250 quid, and we got a market report on the US. They're worth talking to. There's a huge amount of expertise on the different markets, and you couldn't even fly to the country. So that was great, and they gave me a lot of contacts and just helped me through this sort of process. So lessons sort of learned for us. If you are going to look at doing your exporting, it may sound similar, may sound easy to say, but find a similar culture. Something that works in a similar way to the UK, and that's where Australia worked for us. It was a long way to go. It's a long way to ship product. Pricing, it's quite an expensive market, but it was similar and similar language. Sorry, excuse me. It is about this new and long-term relationships I've already mentioned, but my confidence got better. That picking an easy market, working in Australia, working with him, learning what worked, what didn't work, looking at the pricing, my confidence has got more and more. So that's given us the confidence to go into new countries now. The key bit for me in terms of my lesson was that we know the product inside out, but they're the local market experts. So if you're going to have a local, sorry, excuse me. Yeah, you're working on a long-term relationship because they are the ones that know the pricing, whether the product needs adaptation. They're the ones that know who to sell to. And also enjoy it was my key lesson, that go and visit the countries you want to. This is fun. You're suddenly learning about new cultures. You're learning about your product. You're seeing your product around the world. And on the back of us selling to other countries, the PR and the story has grown, and our UK sales have gone up as a result. So that was very positive for us. So that was it. That was what I was going to talk about, just briefly. So it's the 4 models for us. Direct distribution, under license, the ones we're doing ourselves, and the international websites. And they are all horses for courses. Some have worked in some areas, some not in others. But it's been an enjoyable process. But I'll leave my formal presentation like that. I don't know if you've got any questions you wanted to fire at me at all, but that's our story.